know what I'm excited for is that the holidays are over.
I agree with that. God, for some odd reason, and I'm always go, 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 go. During the holidays, I don't go, go, go. And then it's hard to kind of get that engine going again, to be honest.
Yeah.
It's like, I don't know what it's like to rest so much. And then it's like, okay, time to go.
Yeah. I'm like, okay, let's get some enthusiasm. Let's go.
Yes.
Yeah. But
I'm right
anyways,
there with you. So what's up, Deb? What are we talking about today?
You've got this awesome article about 24 rates and how do we get the best one in the market?
Yes.
It's all lies.
So
Just kidding.
You're right. We're going to confirm, debunk, and shed light to an article that we stumbled upon that I think consumers are going to flock to just because of the title itself, how to get the lowest mortgage rate in 2024. And I want to shed light to it. So let's throw that bad boy up there. Kapowie, like so. Either like that or like that. Nope, that's better. All right, and this is how to get a lower mortgage rate in 2024. It starts off after a rocky 2023 in which buyers saw mortgage rates hit their highest mark since 2000. The final weeks of December saw mortgage rates fall significantly. It's now possible to get a 30-year fixed rate in the 6% range. While that
just
may
as a
be
reminder, we
Yep.
hit the 8s, right? Like
yes,
we hit the 8s.
and now we're almost a point and a half, depending on who you're asking and when they're asking, right in that range, which is a significant difference in somebody's monthly payment, especially calculating it based on an average of national purchase price. Okay, so this article talks about some tips on what you can do as a consumer to get a lower rate in 2024, and they apparently know the future.
Me too. I have a crystal ball that's got ran over by the school bus. I've glued it back together. I'm pretty much an expert.
Will you ask it what the lotto numbers are for Fridays?
Yes. Yeah. And then you'll report back to me if that worked.
Yes.
Yeah.
We won't tell everybody. Yeah. We just won't show up if they hit.
That's true. We'll retire. Yeah.
That's right.
Peace out, Home Scout. We're out.
So the first tip that it gives is buy mortgage points. Mortgage points act as a fee the borrower pays the lender to obtain a lower mortgage rate. While you won't be able to buy points all the way down to 3% range offered a few years ago, there is a difference between 7 and 6.5 rate. I agree with the buying of the points to a certain extent. What are your thoughts on the first one? Because I think there's a total of 4. We'll run through those real quick.
Yeah.
What are your thoughts?
Okay. So I have a love-hate relationship with buy down points because everybody's got an understanding of, if I have a 7% rate and I pay 1%, I get a 6% rate. It's not that simple. And
you mean I can't buy 1 point and get 1 point?
No bueno. No, sorry, dude.
How does that work?
No cards.
Tell me how that works, Queen of Mortgage.
It gets super expensive. So it's like, okay, I have a 7% rate. I don't know why I chose 7, but we're going to make 7 be our example. And it might cost me 0.5% just to buy 1/8%. So put that into a little bit of a layman's terms. Let's say we're doing a $400,000 loan and I'm at 7% without any extra discount points to buy down my rate, and I want to get to 6.875, it might cost me $2,000.
Yeah.
Okay, Mark, super math. $2,000 is how that's going to take you a couple of years to recover that.
Absolutely. And I think that is the piece that every layman, every consumer tends to miss in this decision making of should I buy points or not, and it's the break even point. That I think that's where you were going with that.
Yeah. And how long is it going to take you to recover? And we're definitely not guaranteed for rates to go down, but all of the market predictors, they're all on the same page that rates are going to come down. So unless for some reason you hit this total weird freakish day of rates that you can truly buy down pretty far for a minimal cost, man, I'd just be holding off. The frustration I have is how many real estate agents are producing rate posts out there.
Oh
And
man,
everything's
I
these low
just saw
rates with 1% and 2% discount points. And I'm like, you have no idea what the freak you're talking about
that is
when
so
you're
funny that you
advertising this
mentioned
crap.
that. I just had a podcast episode that we just wrapped up a bit ago, and one of the topics that was discussed was as soon as rates drop, it's odd, but realtors tend to turn into lenders on social media. It's like, you guys
Yeah.
know what we don't know. I don't get it. But have rates dropped? Yes. Have they dropped to the point that realtors, anybody should act as a lender to offer, hey, you can do this buy down, you can do this gimmick stuff. Let us be the ones to offer that when it makes sense, because I, for one, am not a fan of a buy down, temporary buy down, just in this kind of market, because in my opinion, you're wasting that money now because you're going to refinance later and there's going to be costs associated with that. So what was the point of that? Unless it's, I want to say, almost free, like you've agreed upon a sales price and the seller's willing to pay closing cost without raising the sales price. Hey, take it.
Yeah. Yeah. Well, I did one. I just bought a house in St. George, Southern Utah. And when we negotiated our price, I did exactly that. I asked for a temporary buy down because I feel like in my capacity, when 2-1 buy downs first came out, and those are a temporary buy down that it costs you a bunch of money, gets shoved into an escrow account. They subsidize your payment for year 1 and year 2, and then year 3 to 30, you have a higher payment in the event that you haven't been able to refinance. Right. So I feel like when those first came out, I was like, we are not selling these. We are not doing this. I want nothing to do with this because it is not okay. Then I learned a little bit more about it and I ate some crow and realized, okay, maybe there's something to this. And I thought, if I'm going to ever need to sell this, I need to see the other side of it. And so I've learned a little bit about it. The one piece that I haven't got to, though, is at some point I'm going to refinance that mortgage and I'm going to see if that little escrow account really can pay my closing fees.
Yes.
Yeah,
and I've heard the same.
That's the claim.
Correct. Essentially what you're doing is paying up the interest up front, right? Or tacking on, basically.
Well, it's subsidizing. So in my situation, I have like $8,000 or something sitting in an account that my monthly payment should be $3,000. And I'm only paying $2,500, so they're pulling $500 from that little escrow account every single month. Is how that's working. Well, that's how it was explained to me. That's what my disclosure.
So you're filling up that escrow account with what it would have been had you paid that monthly.
Yeah, and if I would have just done it
in the proper case scenario like yours, you got the sellers to pay for it. So hey, why not?
Yeah, but the whole situation right now, when we're in an environment that rates are predicted to go down, discount points are stupid. I don't know what else to say about that. They are just stupid because I'm going to spend the money to get from 7.5 to 6.5. And in 8 months from now, I bet we see rates in the 5s. We just lost all that money. It's gone. There's no getting it back. So you got a lower rate for a short period of time. You never recovered the gain. Never.
Yeah. How odd is that?
Yeah. And I did have somebody say this to me yesterday, though. What if the rates don't go down? And they're right. They're right. What if they don't? What if right now I could pay a discount point and get 6.5% and we never see the ability to buy it down further than that? You're right. But man, there's a lot of people in Washington, D.C., all over the way across the country that are going to be freaking out if those rates don't go down.
That's right. That's right. Well, let's jump into number 2 on this dealio. We've got number 2, apply for an adjustable rate mortgage. An adjustable rate mortgage is exactly what the name implies. It's a mortgage in which the rate is not fixed and will adjust over time. While this could prove problematic long-term if rates rise, it could be worthwhile now if you're buying a home, looking to lock in a lowest rate possible. So let's talk about adjustable rate mortgages briefly, if we can. What are your thoughts on adjustable rate mortgages? And I promise I will not change my thoughts on them based on what you say.
Well, back in the day, 20 years
Yeah.
ago, there was a dramatic spread. So you could be at, 6% on a fixed, 4% on an ARM. I mean, you could totally justify doing an ARM.
Right.
I just don't think the spread for the risk is there. So
Yeah.
maybe you can get 6.5 on a fixed, you'll get 6% on an ARM.
Yeah.
Not a good enough gain to me.
I agree. Now, it's important to pay attention to the adjustment rate periods, the max that it can possibly go up. The first number on an ARM is typically when the first rate adjustment happens. The second number is how much that rate can adjust in each adjustment period. For example, I personally have an ARM on our primary residence. I locked in a sub 3% rate on $1 million home. And this was when rates were at 5%. So the spread, like you were saying, was a difference. It does its first rate adjustment in 7 years. So we've got 3 more years left on that bad boy. But here is the reason why I don't recommend them often. There is no guarantee that you will qualify at the time that it's needed in order to refinance it when rates drop. You're aware of when your adjustment period is, but you don't know when rates are going to drop. Like we were talking about, crystal balls, dreams like that don't come true. And in this case scenario, you've got a lot of folks that are trying to save a tiny little bit that put them at a pretty big risk. And we're talking about being stuck in that adjustable rate and allowing it to adjust multiple times over and over each year, when you could be at a fixed payment or a fixed rate, I should say. And worst case scenario, that's your payment, principal and interest. If you can't qualify later, rates drop, etc., you at least have the peace of mind that it's not going to go up based on the market conditions.
Yeah.
That's just my thoughts on it.
Well, and I've done some adjustable rates for people who have a couple of different scenarios. They are a mover. So their job is going to plant them here for a short period of time. And within 5 years, they move, and the company they work for pays the relocation. So there's not really a risk for them. They just do it. They don't care. And then also some of the investors that their methodology is they roll their homes. So they don't intend on keeping that investment property for more than 5 years. So they put a 7/1 ARM in or something like that can
give them a little buffer. Yep.
Just gives them 0.25% or 0.5% lower rate to them. They don't intend on keeping that rate for the full ARM period. So it's okay there. Educated people that have different game plans. But if this is your forever home, or what could be your forever home, nobody knows. Obviously things change, but unless it's your forever home, you just got to look at it that way. Like, when am I going to be moving? Is there a chance that my job's going to take me somewhere else? I wouldn't put an ARM on my own primary residence. First of all, Chris told me if I moved again, I'm moving without him. He's not doing it again. Okay. So, they're your picks for this chick.
I remember when Kristen said that, 3 houses later, we're in this one. So
I think he's serious this time. Yeah.
I believe
I'm pretty sure I'll go alone. Yeah. He's built me 3 houses. So, that's it.
Yeah, he's
There's
done.
No more.
He's done. You know what? You should scoop you one up in Texas. It's a little warmer here.
Oh.
So let's move on to this next tip that they can give you. Okay, so the next one is boost your credit profile. And it says, while today's mortgage rates are high, they could and will be even higher if you apply for a mortgage with subpar credit and low credit scores. So don't make that mistake. Use the time you are waiting for mortgage rates to drop to further improve your credit profile. This one I agree with, and it doesn't even have just to do with rates. It's just in general. If you find that, I guess my question is, why haven't you been doing that along then?
Yeah. Well, and lack of education.
Absolutely.
there's probably I can count 4 people right now that are not buying until spring. And it's all coming down. It has nothing to do with rates or whatever. It's all
No.
coming down to their jobs won't allow them to move. Kids would need to finish their school year, whatever the case might be. And my first question to them is there anything we need to worry about on credit?
Yeah.
Nope, my credit scores are 800. Oh, actually, I have like mid 600s. I'm like, let's get your credit pulled. Let's find out if there's something I can do to fix it. I understand it's a hard inquiry. We can look at doing a soft inquiry, whatever, but let's not waste these 2-3 months that we could fix it completely.
Yeah, no, I agree. And that's great advice from an expert, ensuring that your customer, they've given you the expectation of when they're going to buy. You've asked the right questions on, could there be potential roadblocks that we can foresee right now? They're honest with you. You're honest right back. And that helps you guys avoid any kind of roadblocks along the way. And hey, by all means, there are times that a customer will tell me, hey, I'm not ready to buy until this time frame. I go through that same exact process that you do, and come to find out they did have credit issues. We talked about the credit issues, showed them how to resolve them quickly. Now all of a sudden they're ready to buy.
Yeah.
So all the while it was the fear of being told no that was kind of putting them on the fence.
It kind of gave him an out. Well, if he tells me no right now, it's okay. I already wasn't going to buy, so I don't look bad. Oh man. If that's people just realize we don't care. Like if you are having trouble making your payments, or if you've had trouble in the past making your payments, I'm not sitting here judging you being like, oh, Susie, what have you been doing? No, I don't care. Right. I want to fix it. I want you in a home. I do not sit and think about that stuff. It's like, what can we do to solve the problem?
Our first thought is, how do we fix this?
Yeah.
Straight up.
What's the cheapest and fastest and easiest way to get this thing cleaned up?
Right. Matter of fact, newsflash for those listening, watching, we don't get paid till the deal closes. So,
and we don't get paid if we spend hours fixing your credit and we don't close.
That's right.
But we get kudos in heaven, right? There's points in the big sky above.
Yeah, and if you'll like, what is that song? And if you buy that, I'll throw the Golden Gate in free. That's, oceanfront property in Arizona.
Yes.
That's my Texas coming out. Okay, let's see here. So the last and final one. Oh, no, there's not. The bottom line, with mortgage interest rates dropping and the potential of them to fall even further this year, many home buyers should start familiarizing themselves with all of the ways that they can potentially secure an even lower rate. This could include buying mortgage points to reduce the payment, et cetera, et cetera. So bottom line on this, in my opinion, is the media, everybody, I want to say big bank more so than anyone, is still coaching buyers to focus just on the interest rate. And that to me is a scary thing, because for many years now, buyers have just been focused on interest rate, and it's caused them to make their own diagnosis, which in turn leaves them on the fence longer and not throwing their hat in the ring. And now everything is higher, even though interest rates could be dropping, even though interest rates have dropped, let's say in the future. Well, your home price has still increased, because we've already noticed they haven't gone backwards yet.
No, level out, come down slightly, but not like in my area.
And in your area, let me ask you this. When you say they've come down, are you talking about values, or are you talking about sales purchase prices, list
sales
prices?
Yeah,
exactly.
Yeah, what's interesting is I've got 2 deals that the appraised value came in about $10,000-$15,000 higher than what the purchase price is. Mm-hmm. And I mean, in my opinion, obviously we can't talk to appraisers, but in my opinion, when you get those kind of things, the appraiser's first objective is to hit the purchase price.
Correct.
They're not going to get beat up if they hit the purchase price.
Nope.
So for them to go above and beyond that purchase price, it's a legit number. They don't have to. So when you're seeing those appraisals come in $10,000 or $15,000 higher, you are truly walking into that equity.
And we're seeing it. I mean, all these experts are saying we're still on an upward trajectory on the value scale. Probably a 4 to 6% increase year over year is expected. Okay,
That's normal. That's a
that
safe
means
market.
that's a safe market.
75 to 100% increase is just not, no matter what market you're in, it is just not okay.
Absolutely. Yeah. I mean, and to this article, if rates do happen to drop, that 6%, 4% projection is more than likely going to go up.
Yeah.
So that means you're going to end up paying more for your home because rates went down, essentially.
Yep.
So final thoughts. I think on the next discussion next week, we will be in sunny Florida and we'll be able to have a pretty solid, I'll be in person. We won't be doing this virtual thing. And we'll be talking about credit tips and advice and hopefully give some people some tools, nuggets that they can actually take to the bank in cash.
Yeah. I think right now you've got so many people, realtors, lenders, everybody preaching the same song. Everybody needs to get in and buy the house before the rates come down and gets into a buyer frenzy again. That's not made up. That's a legit concern. So rates come down, we head into the spring market, kids get out of school. All of those things are a perfect storm to have prices increase. So just beat it. Just get into it now. And I mean, sadly, January traditionally is a lower month, I think, for all of the mortgage land because nobody wants to move in the mud. Nobody wants to move in that section of time.
That's true.
There is no weather in this whole country and in Canada. Whatever's going on with the clouds and I mean, I can go off on this little tangent. Let's see what kind of comments come from seeding the clouds. Search that, seeding the clouds last year. That's why we all got pummeled with snow. But anyways, nobody's getting the weather. And so you don't even have, like, you're going to move in our area. Everything's frozen. You're going to move with no mud. So get it done. Beat the spring market when there will be mud. So
good point.
I think that's the big thing. Let's just jump in.
Yeah, no, I have to agree with you. And there's no way, it's basic economics. If you don't want to believe any of the expert novice opinions that you said are all kind of singing the same song in some way, shape, or form, just look at basic economics, supply and demand. We all took that class in, I don't know, high school, something, college, economics, I don't know. But that's our thoughts, and we're sticking to it.
Absolutely. Stuck. Put in concrete.
Amen. Well, Debra, you got anything else?
Nope. We're going to see you in sunny Florida. I'm coming out of 18-degree weather today to go to, I don't even know, 70s or something. So
probably so.
Yeah. So if I'm podcasting next week in a bikini, because I can.
Let's go. That's awesome. That'll be fun.
No, our listenership will go way down. That is not okay.
That's funny. That is funny.
Hey, we'll jump in the ring, guys. If you've got any questions, of course you can find us. Just Google our names. We're all over the internet. So
yes, we are. Why?
Yeah, we are.
Because we're awesome.
Awesome. Yes.
All right. We'll see you later.
Yay, bye.
Bye.